Hi, this is Zach Mayer with the bank holiday edition of the Bulletin Board Heroes here at Zach's Traders Cafe. It is Sunday, the 5th of May. Starting off with the FTSE 100, which is right at the top or near the top of that rising trend channel from back in December. We said 82.20, the nominal top of that channel, and an end of day close above that. We're looking to get to 8,500, perhaps as soon as the end of this month, but obviously allowing for time to reach that area by the end of June. On the downside, we're lucky that we've managed to have support in the recent bull flag at and above the 8100 level. Next level down would be 8044, which was that old April peak, and the worst case scenario at the moment is to head back down to 7880 in the floor of the channel and the 50-day moving average. But at the moment, hoping that the 8044 area will be the limit on any rug pull that we may have. Moving along to the DAX, and here you can see that we've managed to find support at and around the floor of that rising trend channel from October, and the 50-day line, 17,900. Above that, got quite a lot of resistance there at 18,200, but hoping that that will give way and we could head back to 18,500 by the end of this month. On the downside, the worst hoping that it would be 17,500 or 600, basically March, April support for this market. RSI closed the week right on neutral 50, which is a relatively nice look. The Dow is next, and here gapping up through to the 50-day moving average, 38,700. Above that, on an end-of-day close basis, looking for the, I suppose the gap to be filled up there at 39,500, but really up towards 40,000 by the end of this month. Only sustained price action now on an end-of-day close basis, or worse, below 38,000, and the floor of that rising trend channel from October really upsetting the idea of recovery. In fact, we've got a bear trap island reversal, so gapping down and then gapping up on Friday. RSI at 54, which is just where we'd like it to be. We've broken back above neutral 50 for the first time in nearly a month, and that really negates the double RSI 50 failure that we had at the end of April and one at the early part of April. So quite a sharp rebound there for the bulls and the bullish tendency. On to Bitcoin, and here it's been a bit of a tough week, but actually in a way the market's almost proved its resilience with the bear trap below that support line projection. We were looking for 57, 58,000 as a rug pull or a stop loss maneuver, and we got that last week. Current situation is that we're just looking for that end of day close through 65,000 to give us a potential retest of recent resistance, the late April resistance around 67,000 plus. Ideally, we get back to 70,000 in the first half of May. Moving on to gold, and here there was also a rug pull, and still struggling here. We've factored in 2280 to 2300 as a support area, just below a recent support basically. Could be a nightmare scenario of having to test the 50-day line 2246, but at the moment hoping that the 2280 area will do the trick. If you're looking for a momentum trigger, that would come in the form of a break of the line I'm just about to draw at the moment. So basically that line there, which is currently around the 2340 area, so end of day close above that, could be the trigger for a retest of the best levels of last month by the end of this month. Moving on to the stocks, and it was disappointing that Angle didn't soar even more than it did on Friday with the news regarding AstraZeneca. I was expecting it to be, I suppose, in the low 20s rather than the upper teens, but the setup there is a double bear trap island, double island reversal bear trap, in fact, with two gaps to the upside at the end of last month and another gap higher for the start of May. That suggests that this is a situation which has wrong-footed the bears quite painfully, and we could see further progress. The real progress, though, in terms of the technicals would be that the 50 and the 200-day line start rising, but we're looking for at least 22 or 23 pence anyway, whatever happens over the next couple of weeks, given the double, in fact triple bear trap gaps there for that stock. Only back below recent support, basically the pre-announcement support, 14 pence, really killing the idea of a lasting turnaround there. You can also see that we've had double, triple bounces off RSI 50 ahead of the move on Friday. So really good looking technical situation there. Speaking of good looking technical situations, we've got Asiamet, which is making progress towards our second target there, 1.2 pence. We're looking for as high as 1.75 pence, the upper parallel of that triangle from the autumn, to be hit by the end of this month if we are lucky. On the downside, not expecting anything worse than the old target, 0.94, on an end of day close basis. Alpha growth is interesting because the bears seem to be throwing stones at it, but here you can see that after hitting that target there, almost on the nose, that July resistance line projection, shares have come back to test the old resistance on the way down at 1.7 pence, so that might be a clue that above 1.7 we're heading back to 2.2 pence, even if we then sell off after that. Beacon is next, and here, if I can spell it out, you can see that we've got a break of the 50-day moving average. In fact, the first decent break in months. You can see that basically since the autumn, 50-day line has been resistance for the shares, but a nice end of week close there, and closing in the gap down there. The initial target here will be 007, which is the top of that February gap, and then ideally up to 0.12 maybe by the end of next month. We've really got a rising trend channel base rather than a triangle here, if I adjust the lines accordingly. So that is quite encouraging in terms of a potential turnaround there for Beacon. The ideal scenario now is that we don't go back below the uptrend line there, 005, anytime soon. On to Barron Oil, and here picture also quite encouraging in the sense that we've got one of our favored setups, and this is a setup which actually tends to be a precursor of some of the biggest moves that certainly happened last year. Rising 50-day line and a sort of sideways shuffle above that rising 50-day line. In this case, that is around 006, and above that, looking for the 200-day line, right just under 008, and then up to as high as 0.12 by the end of next month. So almost the same, in fact, as Beacon, but a breakout through that little range there, through 007 and a bit more, should hopefully give us the big move that we're looking for. We're backed by an uptrend line as well in the RSI window, which has been multi-tested. Moving on to Cloudbreak, which I suppose is a bit of a wild card in terms of being bullish, given the history of the shares. Obviously, that rally back in June, July, not a very friendly one in terms of volatility. But if you look closely, you can see that there has been consolidation around a now rising 50-day line. There it's a double at 0.37, and we also closed the week above the 200-day moving average in quite a comprehensive way. There's a resistance line there around the 0.5 pence level, so maybe that's the initial target, but if that breaks, then we could see the shares head to the top of that broadening triangle from July at 0.9 pence. Maybe we'll get a repeat of the blink and you missed it type of spike that we had back at that time. The key here, though, is staying above that rising 50-day line, 0.37. Onto a stock which may be a falling knife. Well, in fact, it is a falling knife, but just the first signs that Essensys has bounced off a support line there from back in August. That was around the 13 pence level, so at least while we're above that, looking for the shares to fill the gap up to 18 pence and break that March resistance line. If we do that, then the next level up would be 21 pence. But just as I said, the first sign of a turnaround there, and you can argue also that that's backed by the RSI on the latest low being the same actually as it was on the previous low, so bullish divergence there of sorts for Cloudbreak, for Essensys rather. Moving on to First Development, and here more normal type of recovery here, sort of U-shaped recovery. You could argue it's a sort of complex cup and handle, but we've broken the right side of the handle there at £2.34, and above that looking for a resistance line projection from September at £3.31 as soon as the end of this month. Obviously might have to allow for it taking until the end of next month to do that. The key here, though, staying above recent support around the £2.40 level. On to Helix, which is has done us proud in terms of done the shareholders proud as well, probably as well. The situation here is that we've got rising 50 and 200-day moving averages so soon after listing. Initial target here was 13 3/4. Above that, we're looking for 17 pence. We're looking for that by the end of this month. Hopefully we'll get that by the end of this week, and then maybe we can regroup in terms of what the next upside will be on that stock. Another slightly wild card situation is Orcadian, and here the reason for the enthusiasm, or the relative enthusiasm, is that we have another sideways shuffle above a rising 50-day line. Looks quite encouraging, all those clear candles. The view at the moment is that an end of day, as little as an end of day close above the 200-day line, rising now at 12.25 pence, could take the shares up for a retest of at least April resistance at 18 pence. And the other point to note there is the way that we gapped up at the beginning of last month, but we didn't actually fill that gap. So a failed gap fill, another strong signal for a stock or market. Onto a stock which is perhaps rather more esoteric. Here we've got roadside real estate, and here rather messy, illiquid situation, but at least you can say that above 8 pence, the previous target, we're looking at 14 pence over the next couple of weeks. But obviously it's probably one of those situations which is highly illiquid and also has a rather big spread as well. But the key here, staying above 8 pence mid. Stock which looks decent in the ways that First Development does at the moment is Synthomer, and here you can see that we broke through the 200-day moving average at the end of last week, the 200-day line there at 259. We've also just nudged the initial target, that's actually the second target there, around the 295 pence level. End of day close above 295, and we could be looking at the bottom of that September gap down at 385 sometime later this month. On to the last two. The first one is Transense, and here vertical move last week, and helped along by the way that we've got rising 50 and 200-day moving averages, and also helped along by the way that there was an unfilled gap to the upside on the 30th. The view at this stage is that we've got an initial target there around £1.23, which is the top of the rising trend channel from basically this time last year. If you're a fan of the shares and looking for a higher target, that would be according to the top of, or that resistance line projection from back in October 21, which is heading for £1.40, and we could hit that by the end of next month. The key here, though, in the meantime, is staying above the recent resistance zone, 108. So above 108, looking for £1.40 on Transense. Finishing off with Wildcat, and here you can see that there was a little bounce with the shares on Friday, just approaching or touching that resistance line there from the turn of the year. End of day close above 0.17. We could be looking to at least fill the gap up to 0.21. Ideally, there's another rally from this point up towards the 200-day line, which has been the block on price action at 0.24. And we hit that by the end of this month. In the meantime, don't really want to see any end of day closes back below 0.14 and that uptrend line from back in November. That's it for me today. More updates during the week.